You can withdraw $64,000 a year in retirement and pay $0 in federal income taxes, and none of it has to come from your Roth. Here's the thing I didn't understand when I first was getting into all of this. You're not just taxed on how much money you take out, you're taxed on how much of that counts as income. And this can be two completely different numbers. And in retirement, you get a huge say on how the IRS taxes you on them. So let me show you how to actually get the $64,000 because it comes from three different places. First, you pull out about $16,000 from your traditional 401k or traditional IRA. And this would normally be taxable income, but for single filers in 2026, the standard deduction is $16,100. And so standard deduction reduces the amount that you pay in taxes by that amount. And so if you pull out $16,100 and the standard deduction is $16,100, then you pay zero in federal income taxes, and it's completely tax-free. Now, here's what surprised me most. Long-term capital gains, or the profit you've made on anything you've held for over a year, have their own separate tax rates, and there is a 0% tax bracket. For a single filer in 2026, as long as your taxable income is below about $48,000, then those long-term capital gains are taxed at the 0% tax bracket. So you'd sell from your brokerage account and realize up to $48,000 in gains, and you'd pay taxes on none of that. And remember, when you sell, only the growth counts as income. And so the money that you put in has already been taxed, and so that comes back to you completely tax-free. And then there's the Roth. Qualified Roth withdrawals don't show up on your tax return at all. They aren't income, and they don't count towards any of these limits. So whatever you pull from a Roth sits on top of everything else, so it's completely tax-free and completely separate. So let's add it up. $16,000 would come from traditional accounts, and that would be completely wiped out by the standard deduction. And then $48,000 in gains would be taxed at the 0% rate. So that alone is $64,000. And on top of that, any of your original contributions to your brokerage account comes out completely tax-free. And then on top of that, any of your Roth withdrawals also come out completely tax-free. So all of that would come with a $0 federal tax bill. But two things to know. One is that these are federal numbers, and so your state may want its cut. So that's one thing to check. And two, these thresholds change just about every year. So it's not one thing that you set just once, but a calculation that you would run year over year. And this is the whole reason why I invest in these three different types of accounts, or these three different buckets, instead of just one. And there's one more thing, the Roth conversion ladder. And this is a way to unlock some of your 401k early and get that 0% rate. But that's for a video of its own. But let me know what questions you have below and follow for more.